All right. Thanks everyone for attending. My name's Craig Hong. I'm here with Tom Howard from Pilot Partners. We're just doing a session tonight on the recent federal court case of Commissioner of Taxation and SNA Group. I'll probably give 2 or 3 minutes for some more attendees just to come in while I also get these slides up, and then we'll get going. Alrighty, that's the clock going off at King George Square. So I think that's time to get going. So yeah, as I was saying, thanks everyone for joining. This is a joint initiative by ourselves and Pilot Partners. The genesis of this case came out recently, and Angela, another one of the directors from Pilot Partner, gave me a call and said, "Hey, do you think this has some applicability to medical practices?" And I thought about it for about 2 seconds, and I said, "Yes, it very much does." So that was kind of how this all got started, and really, I guess uh, what we're doing here is just trying to avoid this risk that's arisen of double taxation, where you have a horrible situation where you are getting a situation where you're basically paying income tax, but then you have another entity that's receiving money and you're then unable to claim a deduction. So you're sort of in the worst of every world. So that's kind of what we're looking to get away from. So um, I'll just so that's myself, director of Hillhouse Legal Partners, and that's Tom, who you'll see below. Um,
Evening, everybody.
and yeah, so look, the reason we're doing this as a joint thing is something that we both always advocate is really working together with your accountants and lawyers as a team. You're going to get much better results if you kind of have all parties working in the same fashion towards the same goals, and everyone's kind of singing from the same hymn sheet. So that's an approach that we always advocate, kind of no matter who your accountant is, no matter who your lawyer is. Make sure you get them all in the same room and make sure that everyone is singing from the same hymn sheet. Generally, it'll save you time, money, and you'll get better results. So yeah, what we're going to run through basically is the court case, why it matters for medical practices, service agreements, which is basically the initial example that Angela gave to me, and probably what I think is a very instructive example for most medical practices. Um, some of the legal takeaways and the ways you're going to, I guess, fall foul of these new rules, and just some steps you can take to make sure that you kind of are getting off on the best foot. So the case itself, look, it was actually a case about real estate agents, and I'm sorry to lump the medical profession in with real estate agents. But what was going on was basically they have a number of different entities, this real estate agency, and they were basically paying service fees to use particular assets of other entities. So there was a rent roll, there was some IP, and they were paying fees between entities to use all of these assets. Now, fairly uncontroversial that these other entities did have the assets, that the entities making use of them were making use of them. All of those things were all going on. The the real problem was that they had an old agreement, but that agreement had expired in 2015. They hadn't updated the agreement or renewed it, and they were really just, I guess, relying on this kind of implied continuing contractual relationship. What was happening was basically they would go away and talk to their accountant at the end of the year, and they would say, "Well, what's a reasonable fee to charge?" And what can we sort of do within the bounds of the tax law? And then they were applying that service fee in accordance with their accounting advice. Now, basically, that was what caused the problem. Um, the court basically said, "Well, that's not good enough. Because what you're doing is really you're not operating technically in accordance with the previous agreement. You're just kind of, uh, I guess, reinventing history after the fact by going away and then making it up as you go every year. So that wasn't deemed to be good enough. And look, there's a whole heap of way this can happen. Look, you could have the exact situation from the case where the agreements have expired. Uh, you could simply have nothing in place. And look, because they are intercompany entities, there can be a bit of a tendency to do that because you sort of you're effectively contracting with yourselves. So the risk of, I guess, dispute is lower. All of those other things that we try to protect ourselves with um, contracts for aren't as big of an issue because we know we're not necessarily likely to sue ourselves or our other entities. So we're not as concerned about those things. So the tendency has been to, I guess, not worry about documentation, um, no tax invoices to go along with the payments that are being made, um, no linkage between the payments and the services, or as they were doing in this case, sort of going back and saying, well, what do we want the position to be? And then kind of uh, recording the transactions to achieve a result as opposed to having this ongoing course of dealing pursuant to a contract. Now, look, there is the tax reason, but look, there's a whole heap of other reasons why it's generally good practice to have documents in place for any contracts that you have. Um, and now that this has kind of come to a head, we don't expect it's going to go away. Look, this is one of those things similar to um, I'm sure everyone with a family trust is familiar with last couple of years. There's been a real focus on Section 100 AA, I believe it is. Tom, nod if I'm right on the section. Um,
100A.
yeah. Um, and under those rules, the tax office was sort of taking issue with people sort of just doing their tax affairs and things from family trust without the payments actually having been made and the money moving in accordance with what people were saying was going on with their tax return. So this is a very similar sort of situation where they really want what is happening in reality and what is happening in your contracts to reflect what is happening on the ground. Look, there's also other reasons, medical practices. Everyone's familiar with what's been going on with the payroll tax, so it's going to give you protection on that front. Helps with your structuring. So it's generally good practice to do these things anyway. This tax reason is just another compelling reason to make sure that we're knocking these things off. Um, so look, it was a really harsh result to some extent in this case because the it wasn't such that this thing didn't exist at all. All of the extrinsic evidence is that these things were real and they were going on. It's just that they've fallen down on the documentation part. So it really is just you're already doing it. So it's just going to be making sure you've got that box ticking to get this document in place to make sure you're covering yourself off on, I guess, you know, crossing the T's and dotting the I's just to give yourself that last level of protection. Now, for medical, the reason I expect that Angela rang me up straight away is because medical practices, it is common that we have these relationships with multiple entities. So quite often you will just have the traditional service agreement arrangement where you have the service entity, but then you'll have the doctor in their own structure, be it a sole trader, their medical company, whatever it is, uh, treating patients, receiving the fees, and then paying the service fee back into the entity. So that's why it's a classic example, and it's something that again, if you're running a medical practice and you know that your service entity belongs to you, the tendency quite often has been to just say, well, we'll talk to the accountant, we'll get the service fee right. Tom will give me everything I need in terms of, making sure I'm within the bounds of what's an acceptable service fee for the purposes of my practice and what can be justified commercially. Um, but then we wouldn't go and do the documents. Everyone would just start paying that service fee in accordance with that number that we've worked out, and everyone sort of just proceeded on the basis that, well, we've got this course of dealing, it's obvious what's going on, and that'll be fine. So, what this case is really driving home is that that's not fine anymore. And that's even going to apply for your solo practitioners where the risk of dispute is zero because it's just you, but you're still going to need to just jump that final hurdle and get the document in place. Um, So, what is a service agreement? I'm sure anyone that's worked in any kind of private practice will be more than familiar with these documents. They'll almost certainly be paying a service fee themselves. It really just is setting out, what the practice is going to do for the doctor, what services they're going to provide, uh, in terms of space, administrative support, plant and equipment, all of those kind of things. And look, if you have more than one in a group, you should have one of these anyway, just to ward off the possibility of dispute between doctors and practice, between doctors and other doctors. So there's a number of good reasons to have these things anyway. But now we're just seeing this situation where also all of those deductions you were potentially going to claim in that service entity, sorry, in your um, medical trading entity for paying a service fee may be at risk. So what you're going to have is a situation where the service entity is getting the income, but you're not getting to charge that corresponding deduction on the other side of the ledger. So it's a horrible situation. So it really is just, I guess, something that we have to look out for, but it's just a really prime opportunity, I suppose, to make sure we fix this service agreement issue. Now, there can be, look, I've already run through that one, and I am conscious that we said 45 minutes, and I want to get Tom on because he will be talking about some other things. But yeah, so we're really just running through what type of services are there, what you're getting for the fees, how we're working out the fees. Look, commonly that is a percentage of billings, but sometimes we can have sort of a mixture of fixed and variable depending on what your practice needs, when payments are being made, insurance obligations, and how we're going to end these relationships if someone wants to leave. I've already gone through, we're sort of reducing the risk of dispute. We're covering off, I guess, keeping happy relationships between all of our doctors as well. Uh, and then we are now as well getting that, I guess, regulatory benefit that we're warding off some risk of, I guess, adverse audits from the ATO, payroll tax issues. So, yeah, look, what we'd really want to happen is we need these written agreements in place. We want to keep them current and reviewed. So if we are putting in agreements, we either want them to keep running and be terminable only on notice, or if we have some sort of, if we say an agreement's going to run for 5 years and then we don't renew those agreements, then you're going to run into the exact same situation that happened in the case. So we really need to be conscious of how these documents are coming to an end or being renewed if they do come to an end. And we just want them to reflect what actually happens on the ground, because this is evidence that you're going to need to provide um, if you do get an audit, say. Uh, Now, the timing of when you do these things really matters. In the case, what you can't do is what they were doing is and basically deciding what you want to happen at the end of the year and then going back and documenting something or backdating a document or reconstructing a document. We need to have the documents in place and then operate in accordance with those documents. So yeah, we can't let agreements expire. We can't just say what I was talking about before, just operating on the I guess implied terms of this is what we've always done and the money's always flowed this way. We have to have our invoices that line up with what we say we're doing, and we just can't do the old journals at the end of the year and she'll be right. That's just not going to fly anymore. So look, I guess the prime times to deal with these things, when you should review these documents. Look, if you haven't got documents now, then no time like the present. If you're doing new entities, make sure they're set up with documents. If you are having any fundamental changes, because as I was saying, we want these things to reflect what was going on in the ground. So, if you are making some fundamental changes, we will need to fix those things at the time. If you're expanding, if you've got big events like a sale or a restructure, and then you should just be doing a bit of a review all of the time, just every couple of years, just to make sure that you're not falling foul of any of these issues. Now, I think Tom has just run into some technical difficulties. So, what I'm going to do is we will just do a bit of a handover here. So I'm just going to hop out of the seat. Um, that's me if you want to get in touch. Look, these slides will be made available to anyone that wants them. So please do send an email to Pilot or Hillhouse, depending on how you came to be here tonight, and we'll make sure that you get a copy of these. But I will now hand over to Tom. I might try to log in somewhere else if I can and see if there's some questions in the chat and I can try and answer some as we go. But otherwise, I will hand over to Tom.
Thanks very much, Craig. And apologies, ladies and gentlemen, the tech has failed me this evening. But by way of introduction, as Craig has said, my name's Tom Howard. I'm an Associate Director at Pilot Partners in our tax advisory division. So I work very closely with our Medico team. So as many of you will know, that is headed up by the extremely able Angela Stavropoulos and Christy Baxter. Many of you have long-standing relationships with them and are here tonight because of that. So as Craig mentioned, my part tonight is really to talk to you about the practical side of things. How do we ensure that you as professionals and as business owners are locking in your tax deductions for your intra-group charges? As he's mentioned, this is a recent win from the tax office in the court system, and so you can bet your bottom dollar that they are going to focus a lot of effort in reviewing groups going forward to ensure that there is compliance going forward with tax deduction rules. And so what we're wanting to make sure that everybody is across this evening is that deductions are in place and are backed up by appropriate documentation and regular accounting practices. So that's the précis. We'll roll on. And now, because I'm an accountant and not a lawyer, I like a structure chart. So I thought it might be a little simpler if I was to chat to you about the structure of the group that we're talking about here. This, as Craig mentioned, was the Coronis Property Group. And so very well known to many of our Queensland listeners. In this group, we had controlled entities that was, as you can see in blue there, an operating company, and it was interacting with service entities, in this case, the Orange Service Trust there. Now, as Craig mentioned, that case really dealt with service fees. So we were talking about the use of IP, employment services, the rent roll, etc. And it all fell apart for the group in the federal court because they did not have appropriate documentation to back up their service fee deductions that they were trying to claim in the operating company, that blue entity there. Now, whilst that case was focusing on the property group and it did focus on service fees, this case has a really, really broad application to everybody in our audience tonight, and indeed every business owner, because this is not just limited to service fees. The application of this case goes beyond service fees and will group in things like related party loans, shared cost agreements between entities, lease agreements between related entities, employment agreements between related entities. The list goes on. So whilst this case, yes, it did focus on service fees, the application of it is a lot broader, and you can bet that the tax office will be having a look around in these other areas and using the principles of the Coronis matter and looking to apply them to different areas. And if there's any areas of weakness, that's where their tax office audit team will be looking to raise revenue along in the next sort of 4 or 5 years. This will be, because they've had a win, this will be a hot button topic for them, and they will want to make plenty of noise about it. As Craig said, much like the Section 100A matter of a couple of years ago, and anyone with trusts will remember that. Division 7A is a topic that comes up every time with the tax office. These are their common hot button topics, and the ones that they like to get in the room and talk to you about to check that you are compliant with these rules. And they will be using this Coronis case as an excuse or as an avenue to talk to you about, are your service fees deductible? Are your employment agreements, are they deductible? Is the interest on related party borrowings deductible? Are your rental costs with related entities, are they deductible? And are your shared costs, if you're under a shared cost agreement, are they deductible? So that's the group overview and how we see this playing out in the broader business and indeed Medicos space. But we'll drill down into a little bit of detail here and we'll talk about what was the ATO really looking at. And as I've been mentioning, they were looking at deductions. So they are talking about the operating business that was paying the other entities, and they were really coming at this from a perspective of, were those fees incurred by that operating business? And the word incurred is not defined within the tax law, which means that we need to go to case law to find out really what does it mean. Ultimately, we're looking for there to be a presently existing liability in place that the party was definitively committed to. Ideally, we want to see the cash being paid and clearly being paid from that operating entity in satisfaction of the intra-group charge. Say it's the service fee, for example. We want to make it as clear as possible so that should you get in the room with the tax office, it's very easy to prove up, no, here's our agreement. This is where we were locked into the liability. And guess what? We paid the cash to settle that liability. It makes your conversations around that a lot easier. So when we're talking about, was this incurred? Were these costs incurred? For a business or any taxpayer, there needs to be either a nexus to income for your outgoing to be incurred, or it needs to have been incurred in the operation of your business. Now, as medicos, as medico professionals here, we are talking about the business side of things. And so are these costs being necessarily incurred in your business? Ultimately, if the tax office reviews your group, and if you are in a review and, should it even go to the courts, well, ultimately, the onus of proof here is on you as the taxpayer. The ATO has a lot of power to effectively call the sky black, and the onus of proof is on you to prove that it isn't. So in cases where, for example, the Coronis case, where they really got into trouble, was that the tax office put forward their position that their service fees were not incurred due to lack of evidence, and the onus of proof then going back on the taxpayer. Well, how could they prove otherwise if the documentation wasn't there or up to scratch? And that's where the taxpayer in that case got left in a really bad spot. And as Craig pointed out, there is a double tax nightmare here that I'll explain a little further just a little later. Something to be careful about here in this space, and we see it regularly, is the ATO's audit teams, and there are many of them. There's different streams, but there are very well-funded audit teams in the high net wealth market. So they are looking regularly at groups such as successful medical practices and practitioners. They are looking regularly. So they will come in, and it could be triggered by anything. It could be a superannuation slip up that might have been an honest mistake and been fixed, but it raised a flag for them, and the tax office comes in to have a chat. It could be an STP mismatch. It could really be any data matching thing. So once they're in the room, then they can have a good sniff around, right? The reviews in the high net wealth space, we are seeing more regularly. And when they come in and they see your group, they want to get a level of comfort as to what's going on. They will be asking about your deductions here. They will be using the Coronis case to prove up or to test that your deductions were actually locked in and that you've got evidence to prove it. If there's any sign of weakness, they will go hard here. So this is a really good warning sign for business owners and you as medical professionals to take this as a great cue to ensure that your levels of, and I say tax governance, but general governance, are up to scratch. And I don't think it's not particularly complex, but it's got to be done. And as Craig said, there's a solution here, and it requires all the advisors, being your accountants and your lawyers, to be on the same page here with you to ensure that the documentation is up to scratch, it's understandable, and it's usable. The tax office, of course, has put out for many years, the service fees, if we talk about medical service fees, what are appropriate for your specialisation? Now, whilst you might be complying with the percentages used and the service fee used, and that might be within acceptable ATO bounds, please do understand that that is a completely separate matter to your income tax deductions actually being deductible. The ATO's guidance around your percentages is completely different to you being able to prove that your liability was incurred. Being able to prove your deductions is where your documentation is required. This is where your agreements are needed. And so it's got to talk to all of that, and your advisors have to be on the same page to de-risk you as a medical professional, because you don't want to be hit with one of these reviews, or if you do get a review, you want to cut the tax office off at their knees very quickly because you've got your documentation in place. Your practices are up to scratch and everything's nice and clean. And it might only be one meeting with the tax office where they get comfort around your level of tax governance, and then they go away. And they may not go away forever, by the way. If they come and are satisfied with your levels of compliance and governance practices, they may put you on a review. And it's quite common if you get a question from the tax office or some sort of investigation, it is quite common to see another round of questionings or investigations, maybe on similar matters, maybe on different matters, in another 3 years, in another 5 years. They do like to return and pay a call on you to check all is well. Not quite as caring as you are for your patients, mind you. They can be a little bit more aggressive if things aren't quite, in their eyes, up to scratch. So ultimately, what does this mean for you? What's the financial impact for you as medical professionals running your own businesses, if things are not up to scratch and if liabilities are not locked in with appropriate documentation? Well, straight away we said, well, there's a risk that the tax office comes in and reviews, and they will review. And because they've had a win at the full federal court, they're going to review on this coronis type matter to, to check your deductions. Now, in the coronis case, where their case fell apart was that they didn't have that documentation. What does it mean? Ultimately, it meant that the operating entity that had tried to claim tax deductions in the past was denied a significant number of tax deductions. And this was relating to a period between 2016 and 2019. That was the review period in question here. Now, whilst that company was denied the deductions, that meant that those assessments, the tax assessments for that company, were increased by the amount of the denied deductions. And so we are talking multi-millions of dollars here. So there's a massive tax bill in that operating company that is historic and that does have penalties and interest applied to it. And in some cases, we're talking about a year that was 10 years ago. So there are massive costs here of getting it wrong. But the real kicker is not only do you have this enormous tax liability plus penalties plus interest for the 10 or so years that the review period was in action, you also then have this case where you've paid amounts to the service entity. That service entity was taxable on that income at that time. It was a trust and it distributed that income throughout the Coronis group. The fact that the operating company lost its tax deduction through this case does not in any way change the character of the income earned by the service entity. What does that mean? Those tax payments that were historic based on the service fees received by the service entity, that is still income for that trust. That is still income for the beneficiaries. They do not get to go back and amend their tax assessments down to say, well, actually, I was denied a deduction on one side of my group. Logic doesn't flow like that quite so well in tax land, unfortunately. And so that is how we're saying the Coronis group landed themselves into this double tax nightmare. And to add, insult to injury, then they've got penalties and interest to deal with over that period. In the case, Craig mentioned that there were no invoices here. Not only was there an old agreement, but there were no invoices here. There's a kicker in that because where there are no invoices for a service charge, the entity paying that cost, well, it's not entitled to its GST credits. You need to have an invoice to be able to claim GST credits. So not only did this group walk into an income tax, an interest, and a penalty sort of world of hurt, add on top of that GST because you've just gone and lost all your GST credits. Now, the case didn't focus on GST, it focused on income tax. But you can bet that the tax office is going to ask the next question in another review and say, we'd like to look at your GST now. And by the way, you don't have invoices, and we know that. So we're going to deny you all your GST credits. And as I said before, the period of review was between 2016 and 2019, so it's quite historic. The tax office could very well go and say, well, we'd like to now have a look at 2020 to 2024. And so the nightmare just spirals here for the group. So what we're saying today is make sure you are not the next Coronas group. You cannot afford to be, because there is a major cash flow hit should this be you. Should things go wrong, there is an enormous tax liability across your group, which impacts not only your quality of life and your mental capacity to go day by day and service your patients and run your business, but there is an enormous financial hit to your hip pocket, which can seriously impact your wealth generation strategies. You may have a great track record of investments and growing your personal and family group's balance sheet. But if you get a snowball sort of effect like this with the tax office, and they deny you your deductions, and you have double tax, and you have a GST problem, well, this can put a major, major hole in your family's wealth and wealth creation. So what we're saying is make sure things are in place so that you're not falling into these traps, so that you're not having these multi-million dollar problems. And can we fix it? Absolutely, we can. Um, Working together as your accountants and your lawyers, we can absolutely get you on a lower risk path. We can keep you within quite acceptable bounds. How are we going to do it? Well, we're going to work together to document the arrangement, as Craig said. This is really, really important. Um, Old agreements aren't going to stand up. Things should be reviewed pretty regularly. But we want, if it's not documented at the moment, we want it documented. Um, what about your accounting day to day, your bookkeeping? Well, guess what? We want regular invoicing as well. So we actively do this with our clients. We ideally we want to see those invoices for service fees, for lease payments, shared costs. We want to see them done as regularly as you can. Ideally, that's monthly. Quarterly is okay. 6 monthly is probably not great, but yearly is certainly not acceptable under this ruling. So we want to see that invoicing regularly. We want the controllers of the entities, so whether they be the directors or trustees, needs to be across this, because in this Coronis matter, it did show that the controllers, the common directors were within the group, were not really across the detail of the service agreements in place or how they were calculated. We want to make sure that it's not only do we have the documentation, but you understand it and that it's usable. Um, the next point there, okay, we want those invoices out regularly. We want to record those shared those service costs, or whatever they are, in the books, your management accounts throughout the year. So if you're part of our client list and our bookkeepers are looking after you, we're making sure that that's happening. The Coronis family did fall into the trap of things being recorded at inappropriate times, possibly too late after the end of the year. That's not acceptable anymore. So we need to be on top of this, and it just needs to be part of business as usual practices. At Pilot, that's what we make sure happens. Um, the next one, well, what else should we be doing? We want to see the cash flow. As I said before, there's going to be a liability here. We have a document to prove it. We've got invoices to back it up. We want to see the cash flow to show that actually we're not making this up. This is a real liability and we are settling it via the payment of cash. We're also saying there should be a basis for the charges. Now, interestingly, in that Coronis matter, there was no argument with or from the tax office about the level of the service fees charged. They actually don't have terribly much power to dispute that, although occasionally they will have a sniff around, particularly in cases where they think avoidance might be on the cards. But if there is a clear commercial purpose and justification for the charges, then you are in a de-risked environment. The next point really does uh, apply to the coroner's case. That was don't leave it to gut feel or the bookkeeper. Things were being done not as they should. Things were being done after the end of the year. There was a lack of clarity around the way that the service fees were calculated and charged by the group. So we are not wanting any of our clients to be in that space. We want to be on top of all this stuff, and that's what we're doing at Pilot. We are undertaking regular governance checks, and that might not sound that interesting to you, but we are doing this in the background, and we will be discussing it with you. Um, what does it mean? It doesn't need to be. We are not imposing the sort of BHP level of governance on medical practices. The governance needs to be fit for the scale of appropriately scaled to your business. Um, but we are looking at updates like this from the tax office, from the courts. What are the risk areas? Where do we need to make sure our clients are operating? And so our regular governance checks will look at, well, is the documentation appropriate anymore? Does there need to be an update? Has there been, if we're talking about a shared cost agreement, have there been changes to the parties? Does it need to be updated to account for that? Right. So how can Pilot help? Well, I've spoken a bit there about what we can do and what we do, but we are acting as our clients' trusted business advisors. We are with you the whole journey from startup to retirement and even on to your next generation. We are there every step of the way. However, wherever the road takes you. Um, we provide strategic whole of group advice. What does that mean? We're not looking to get a great outcome for you in respect of one entity in your group that could actually lead to a really bad outcome in another entity. We are looking at a whole picture here to find the best outcome for you and your family's group. And as I said before, we are undertaking regular governance checks to make sure that you are outside of the risky areas with the tax office. And if there's a problem, we're going to be addressing it with you. We're going to be bringing it up. We're going to be having a meeting. We're going to be talking to Craig and his team at Hillhouse about how we can um, uh, correct any issues with documentation or update them to get in front of problems such as the Coronis property group ran into. If you're using our bookkeeping service that often a lot of our Medico clients use, well, they're on top of regular invoicing, getting those things in the books regularly, making sure that we can show to the tax office, guess what? There's a paper trail here that shows that things are being done regularly. Amounts are being booked as they should throughout the year. This is not happening after the end of the year. And as a firm, we are on top of the tax office's announcements and the rulings in the court that relate to tax matters because we know that we need to be on top of it to ensure that your governance is at an appropriate level, and we need to be having the conversations with you about it. So with that, and conscious of time, I wanted to begin our questions. Now that they are my contact details there, as you know, like many of you know Angela and Christy very well. You have their contact details. Now you have mine. We would, as a team, be very, very happy to talk to you about any concerns that you might have, and we can help guide you through it in connection with Craig and the Hillhouse team. So we might roll on to questions.
So, look,
Craig, do you want
yeah, in line with the technical difficulties, I've just tried to hop onto the chat and it doesn't seem to be working.
Okay.
So, what I'm going to do is I've just had a bit of a think and I'm going to just hit you with some questions
Right.
without notice.
Let's go. I've got a couple as well.
Look, I know we've focused on service agreements,
Yep.
but do you think it's fair to say that this is going to hit other areas, any intercompany loans?
Yes. Yep. Absolutely.
Leasing.
This absolutely it will. So anytime we're dealing with an intra-group transaction, we're thinking that this coronis matter, this SNA case, as Craig said, uh, will be used by the tax office to test the deductions being paid by the operating entity. So we have seen recently cases where they've wanted to have a look on an employment review with a related party. Now, in that case, they didn't, this is historic, this was before Coronis got handed down, they did not, the tax office, ask for the employment agreement. They asked for the commercial rationale and the evidence of payment and super and work cover and the like, and we could provide all that, but they didn't ask for the employment agreement. Now, I can bet that going forward, absolutely they're going to ask.
Yeah.
Lease agreements, likewise, they're going to ask for the agreement. This has a really broad application.
And look, I think it's fair to say that wherever the ATO, I guess, smells a window for something, they will
Yep,
jump wholly through that window.
absolutely.
So
Absolutely.
now, what about, I guess, because look, in this case, as you were saying, those timeframes do go back
Yes.
quite a long way. So what if someone was to say, well, it's all too late and there's nothing I can do, the past is the past and I can't fix it?
Yep.
What's your approach on that?
Well, I think that's where we're working together to ensure that documentation is put in place now that's appropriate. And maybe there's a level of formalizing the conduct of the past that has been compliant. Now the tax office has said, okay, here's our opinion in the Coronis matter. Well, what can we do to put documentation in place to cover everyone as best we can?
Yep.
To de-risk to the maximum extent. And so that's where we'd be engaging with you, Craig, to look to do that. And I think in terms of formulating those agreements, I'll ask you here because you're the legal expert, and I'm purely an accountant and maybe a bush lawyer sometimes. But um, the in terms of formulating the agreement, we want that to stack up, but we also want a bit of flexibility in that agreement. So
Yep.
in cases where, um, uh, let's say it might be a lease agreement that we're talking about, there's a medical practice, one of the doctors might own the premises in a separate entity. The amount of the rent, we want to lock that in a lease agreement. But what about if there's a lean period, for example, and maybe cash flow is not as good as it had been? Can we build in flexibility into those agreements to say, well, the charge is to be calculated this way, but build some flexibility to say we get some mutual agreement if things aren't as foreseen?
Yeah, so look, that's definitely possible. Look, leases are a great example because I suppose leases already have rent review
Yes,
mechanisms because
indeed.
they go for quite a long time,
Yeah,
and we know that um, uh, conditions will change. Now, the
yeah,
common type of mechanisms we see are kind of like a fixed rent review
yeah,
or a CPI review.
yeah.
So the fixed rent review, I guess, doesn't take as much account of what
No,
is going on,
yeah.
whereas the CPI is kind of tracking um, along with inflation
Economic
and
growth in
market
it. Yeah,
forces.
yeah,
But those are just particular rent review mechanisms. You can put any type of rent review
yeah.
mechanism. So you could theoretically tie it
Mm,
to practice earnings
yeah,
or other, and quite often in retail leases we will see something like a a turnover rent, or
sure.
so you can mix together like fixed and variable mechanisms.
Yep.
Look, very commonly when practices are starting up,
Mm,
we will see service agreements
yes.
that have a fee that is the greater of a percentage
Yep.
or the operating cost because you've
Yep.
got to keep the lights on.
Sure.
So if you're slow to get going,
Yep.
you still got to pay that service fee that sees all the staff paid, that sees all of the
Exactly.
rent paid.
Yep.
So yeah, that's definitely something that's open to uh, to people to do, to have some flexibility built in, and it really is just a question of um, I guess mixing something in
Yep.
with some advice from your accountants and lawyers just to make sure you have some mechanisms there that work. Oh, look, I can see on this chat
We've got a question.
we actually, so the chat is working here No, that's just
Okay.
from me
Now I
saying from Tom's computer that the chat is not working, and so it's come through very late. So
to,
apologies for that.
I do have one more
Yeah, for sure.
that came through to us before we had these issues, and it came through this afternoon actually
Hmm.
in anticipation of tonight because I know we had a big audience that wanted to listen to us, and I'm very thankful for you to give up your valuable um, after hours time here. But one was, what about the case where the specialist doesn't really have control of the service entity and we haven't been documenting things maybe quite so well? Who's got the onus here to go and get things on compliant terms? I mean, it's the doctor's deduction that's at risk,
Yeah.
so you
So
should be out there.
look, I think really definitely if we follow through the case,
Mm,
it's the doctor's deduction that's at risk.
yeah,
And but look, I guess to from a doctor's perspective as well, technically you're the one that's paying a, a fee for service.
yeah,
So you really should want to have a document that says, well, what am I getting
yeah,
for this fee that I'm paying?
absolutely.
But then from the practice's perspective, you also want clarity around, well, what are the bounds on what I do and don't have to provide? So
Yes.
look, I think it's in both parties'
Yeah.
interests to document these things. And as I was saying, there's a whole heap of benefits that you get from having these relationships
Yes.
properly documented over and above
Just your tax
just
deduction.
your tax
Yeah.
the tax. This is just the impetus for this, and this is why
Indeed.
Angela rang me up.
Yeah.
But it's just as a reminder. It's not
Yeah.
that this wasn't a good idea yesterday
No,
or the
exactly.
day before the case came out.
Yeah.
It's always a good idea.
Yeah.
This is just another,
Yeah.
I guess, cherry
Reason
on
for it.
top.
Yeah. Yeah.
Yeah, yeah. Um,
For people who are listening, type tomorrow
Yeah.
yeah.
questions.
So
If you've got any questions online, please do send them through. Now we know there's some tech issues here, obviously, but we are more than happy to get in touch with you. If you drop us an email tomorrow, we are more than happy to get back in touch with you and sort those out.
yeah.
Because we're looking to help you here through this process, and we do apologize for the tech issue here.
Now, and look, I do expect we will send some sort of joint communications out after the event anyway. So please do put those questions through. We'll include any questions that we've received as part of that. Also, I'm sure that both Pilot and myself will be more than happy to make some time available if you just want to hop on a Zoom and have a chat and just have, if you have particular concerns yourself, if
Yep.
if the light bulb's gone off and you say, hey,
Yep.
I haven't got document X, Y, and Z, whether it's a service agreement or it's a lease or it's a loan where you're getting paying some interest to another entity, whatever it may be, if it's going to keep you up at night, then just make sure you get in touch and we can
Yep.
have a quick chat and I guess put your mind at ease and get some fixes in place.
Absolutely.
Excellent.
All right.
All right. Well, thank you very much, Tom, for
Thanks,
for
Craig.
trekking here to Hillhouse as well to make this happen. And I'm glad we
Pleasure.
were all in the one place, given what happened with the
Indeed.
tech.
Indeed.
So yeah, thank you everyone as well for, as Tom said, making the time. I know how busy everyone is with families. I'm sure there'll be dinners that children are hungrily awaiting. So thank you so much for making the time. And we really do appreciate you all coming along and making that effort.
Thank you.
Thanks.